So I'm still in my I like the stock. But the thing is with Tesla is if this thing squeezes higher one last time, if my calls are sorry guys, my internet blips every once in a while. If my calls are in the money on this last run that I've been doing, and actually I'm loving this. Tesla down today, 6%. In a weird way, I love it, right? I'm up a lot on the stock. At one point, I was up 100% on my position. 100% return on this stock. For me personally, Tesla's the best stock I've ever owned. I've made more money in Tesla than I have in almost actually every other stock. I've never made more money than in Tesla. I've sold so many options on Tesla, collected so much premium on Tesla. I've made so much in stock appreciation on Tesla. It's just it's a crazy, crazy volatile instrument. That being said, I sold calls again, pushed it out to end of January. If this gets called away from me, then it is what it is. But I was able to basically collect a credit. I rolled out my option to the end of January, collected a premium for doing so, and I'm still in the shares. So this is perfectly fine with me. Down day today. Again, Nasdaq down 2.1%. I'm wondering what's going on here. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hey, Chris, I think you're muted.
Oh, I am muted. Thanks. Well, I said all this really great stuff right out of the gate. No, I'm just kidding. Anyway, hey, it was I was just saying happy Friday. I was talking about the Mag 7 kind of leading the way. And so here we go. Tesla down, Amazon down, Apple down, Microsoft down, Broadcom, which is now considered in the top 10 because of that big earnings pop. So it hit $1 trillion market cap. AVGO is down, Nvidia down, Google down, Meta down, Netflix down. Storage stocks that have pretty much carried us this entire way. We've got about 69% of stocks down today. That's pretty notable. We also had a reasonable gap to the downside, which is unlikely to get filled. I'm looking at some levels here on my this is the liquidity levels that I watch quite a bit. The only thing I would say for defending would be that this is a hunt for liquidity towards market maker levels that are sitting around 5930 to 5900. This would be a potential defense zone for the bulls. Started this morning with a nice level at 6050. and that was defended with the, I mean, we got there yesterday. We had a gap open. I was like, well, maybe we have an island gap today. Nope, we're just getting more directional. So right now I look at this as a liquidity hunt by the bears. We're taking away the Santa rally. I'll show you that in just a minute. Like I showed, I'm just saying this. It's a Mag 7 sell-off, and we should know that this much market cap, this highly concentrated, with stocks that are like, what, 30+% of the balance? So let me find the stat here. What's our concentration point? It's kind of ridiculous. All right, I'm looking for it. Son of a gun. Well, I'm finding all this US valuation stuff, Case-Shiller, price to earnings, price to sales. I got it here somewhere. Anyway, Mag 7 is like 30. It's like one of the highest concentration levels we've ever seen. Like in the S&P or the SPY or the QQQ, Mag 7 is like one of the highest concentrations we've ever seen. So if they topple over a little bit, it's not a surprise to dragging the market with it. But if I stare at these levels, it's like, okay, so we are stepping in with a little bit of defense around this Christmas Eve gap. So here's our Christmas Eve gap right in here. We'll see if the market can stabilize. But like I said, we're kind of in no man's land. I have some market makers level up here. I have some market maker levels down here. There might be enough pressure just to see this continue to unwind a little bit until we see that inventory is collected and then defended. So if I'm going to get bullish, I'm giving myself some time. I actually took a trade this morning on this first sell-off. I'm looking to see if we close that gap at all through the holiday rally. I did have some interesting research I thought through the Santa rally stuff. Check this out. I put this on my Discord. This is the last 70 years looking at the Santa rally. The average return from Christmas Eve to the first 2 days of trading through January, which is actually perfect for this year because it gets us to next Friday. Next Friday, the 3rd, is going to include 2 days of trading in January, which is the textbook Santa rally. So Christmas Eve, which was Tuesday this week, all the way to next Friday, that's going to include your entire Santa rally window. Okay. Now, on average, it's a positive 1.3%. And historically, we've only had, let's see here. Looking to see. Okay, the Santa rally's only notched back-to-back losing years twice in 70 years. So if we had a Santa rally that was red this year, that would be the 3rd time in history. That'd be the 3rd time in 70 years that we've notched back-to-back losing Santa rallies. 2023 was not a winning Santa rally window. And if we were down below it like we are right now, same thing. So if I go to my chart here, and let me zoom in on, you can go SPY, SPX, you can go whatever you want. But we essentially started Christmas Eve, which should have been the day before, right? So the close here on the 23rd is right here where my cursor is. That's the start. So we were up on the rally about 1.27%, which is the average with still more days to go. And then today we gave it all back. So we are officially flat on the Santa rally and actually slightly red. We're down about 0.3% now in the Santa rally. So the question is, will it stabilize? Will it come back? I don't know. If we zoom out for a moment here on the 15-minute time frame, I'm also wondering, well, did this market just put in an FOMC bottom? Is that a top? Is this going to be a topping pattern? And we came right back to fill, left tip, right tip, getting this gap. Is this going to have some pressure to the downside? I'll go back and say this. This is also why I'm hedged, right? Lee, I had somebody ask that same thing. I don't see any correlation between the 10-year. Nope, I don't. And the reason why I say that is, okay, let's go to the 10-year chart. Okay. And it has nothing to do with the 10-year. So if I go back to the 10-year, put this on a yearly time frame. So the 10-year is actually flat on the day. The last, let's say, okay, 2024, 2023, 2022, 2021. We agree here that we have 1, 2, 3, 4. We have 4 years in a row, right? We have 4 years positive for the 10-year yield. Yes? Everybody agree on that with me? So we have 4 years positive on the 10-year. Now, looking back on the Santa rally, how many years have been positive? Well, 2023 was negative, but 2022 was positive, 2021 was positive, 2020, 2019, 2018, 2017, 2016. A lot of positive years. So I don't see that the yield curve, now inverted versus disinverted, maybe. But, the one thing that we can say about an inverted yield curve is it's not a timing mechanism. Okay? Because if that was the case, if we go to the 10 and the 2-year here, let's just go to the daily chart or the weekly chart. Okay? What has this market done? Let's go back into the 80s here. Let's start into like the 90s. Can we say that this is where we got in? We were inverted here. Okay, inverted here, inverted here, inverted here. Briefly, right? The reason this isn't a timing mechanism for the inverted yield curve. Okay, inverted yield curve is not a timing mechanism for recession. Also, recession doesn't mean 100% of the time that stocks go lower. It's pretty much like 50-50. I think out of the last like 11 recessions, 5 times it's been bullish for stocks or stocks have gone up. Okay. Also, it's the disinversion that I'm concerned with because the inversion happened and we obviously had this very long, drawn out, deepest in history inverted yield curve. Now, this is the 10 and the 2-year, right? But the 10 and the 3-month, this is like by far the wildest look back. Like the 10 to the 3-month rarely became like this is a pretty good inverted yield curve. So that was a pretty good inverted yield curve where I'm marking these vertical lines. This is the recession. Okay. So the recessions happen after the disinversion. Okay. After the disinversion. After the disinversion. Well, we are officially disinverted. So is this the factor? And look, if you see them all of a sudden we go into like a tailspin and the markets are selling off and they throw the headline out there like 10-year in the 3-month disinverted yield curve undefeated recession indicator. Well, we've known about this, but it's not a timing mechanism because this entire time that we've been inverted, this market's made all-time highs since Q4 of 2022. Once we bottomed out, we had all-time highs in 2024, right? Or into 2023. When did we hit our all-time highs after that little 2022 pullback? I think we got there by the end of 2023. If I go back to the SPY for a second here, this is going to take a little bit of digging. When we had our 2022 correction, which would have been in here. Okay, so this 2022 top, which would have been November in the QQQ or the Nasdaq and January in the S&P, it did take around 2 years to get back. Because from 2022, this would have been January of, let's see here, January of 22. And then over here to revisiting that high, that's January 2024, right? So we were in a 2-year drawdown, right? But as we got into 2024, all-time highs, momentum begets momentum, all-time highs, all-time highs. So I just look at this chart for a second. This chart looks pretty clean on the technical side. If we can't hold these all-time highs and we pull back to, I don't know, let's say the election levels, let's say anything lower than that. I mean, you can see on this weekly time frame, this market would be pretty well supported down to around 530 or so, right? And that's a pretty big sell-off. I mean, if we had a market that was going to drop from highs around 609 down to this level, let's say around 540 or so, that's a 10% correction. Okay, that goes right back to the daily time frame of where do we see some dynamic levels. Well, right now we still have we're clinging to these highs. I wouldn't necessarily say like this is a topping pattern, but it certainly can become one very quickly. And how does it become a topping pattern? If there's a lower low, right? I mean, that's more of like a, well, I told you it was a topping pattern, but I'm not going to call the top. And the reason why is if this election stuff is still going to hold, okay, if these levels with the FOMC sell off and that PCE news low from last Friday, if that's going to hold, then this is a false top. Okay. But if this market goes high, low, lower, high, lower, low, and pulls back into the 100, the 144, or the 200, which I've been saying now for over a month, you got to watch the bar count situation on the SPY. It's getting up there. We're nearing 300 bars on the daily. We've got Nvidia and Meta and several of those stocks that are stretching out to 400 plus bars. That's a long time without hitting and balancing the market at the 200 moving average. Okay, so if today is doing some serious damage, which it seems like it is it enough to have some follow through, or is next week right before New Year's and going into New Year's in the first little chunk of time in January? Usually it's a pretty bullish window. For December 24th into January 10th is usually a pretty bullish window. All of December into the first part of January is usually a pretty bullish window. Okay. So anyway, I would say this. If you remember the session I did last week, I shared a lot of things. Let's go intro to options, a little, kind of reference guide that I always keep, and I've been building this over the years. So let's go all the way down here. I talked about this. I don't know if I did it in this session or I did it one of my final hour sessions on YouTube, but bull market on borrowed time. So folks are too bullish. Sentiment is too frothy. The extremes and the risk appetite is just, it's too much. And when everyone's leaning on one side or the other, it can be a problem. You taking my car, right? I don't know, but okay. So sentiment's extreme, right? And the scary stuff is that we've got crazy amounts of expectations, we have crazy amounts of risk appetite, we have crazy amounts of sentiment that's pegged to one side, and you're also getting a lot of levered instruments that are also back up towards the extremes we saw back in 2021, 2022. Okay, sentiment is stretched, positioning is too bullish. Leveraged stocks are back up to the highs we saw back in 2021 and 2022. Everything is pegged to the 100th percentile of risk appetite, right? Most folks, household wise, are not exposed to equities like they've been. They're just dumping into equities. So it's crowded. It's a crowded trade. It's crowded at the top. It would make sense for the market to ventilate. It makes sense for the market to just, let the air out a little bit. Let's find some more realistic levels to rebuild from. And the scary part is, yeah, it can be a little bit exhausting to see like, oh my gosh, we're going to go 10%. Yeah, maybe we do. But is that a 10% level that the market can build from and they get back to highs again? And I said this, I would rather see this market go high, low, lower, high, lower, low, and whatever it takes to give me like a correction towards this 200 moving average, or find some structure in here and see if that area, let's just say SPY, I'll call the numbers here. Let's say SPY around like 550. 560 to 550, I'd say that's a really attractive level. Now, I don't know if we're going to get there, but if we do get there, to me, longer term, okay, give myself 5 years. I'm getting a decent discount, right? So, do I have enough cash to, get some in at a 10% correction? Yes. If it gets worse, do I have enough cash to get in at a 20% correction? Yes. If it gets worse, do I have enough to get in at a 30% correction? Yes. Because the whole time this is falling, I'm going to be protecting, right? I have hedges. I have collar trades. I have long puts on my own positions that are helping me protect my stocks. So I will still have plenty of cash to then add at discounts. And if it takes another 12 months to get back to all-time highs, and I get that discount, and I get that discount, and I get that discount, there's a lot of money to be made. And that is where a lot of profits and wealth is generated, is having the ability to really take advantage of dips that the market has. Okay. What's wrong with it? I typed it in exactly how I wanted today. If you got it, it was a February 7th expiration, and it was a bull put spread. You seeing something different? Let me look. All right, let me look. All right. Let's see here. Just logging in to check an alert that was sent out earlier. That is totally accurate. Yep. So Sunset Drive, your question there, it's exactly what I did. That's the trade I put on this morning. So it's right. Okay, what do I think about the Dow? I mean, the Dow's fine. The Dow's been taking a lot of heat from United Healthcare, right? United Health Group has sold off a ton, and that's dragged the Dow. That's one of the bigger weightings. So if you go DIA weightings, you're going to see UNH is at the top. Look at that. UNH is 9.5% of the DIA. That's pretty big. And then you got Goldman Sachs, Home Depot, McDonald's, Microsoft. I mean, pretty good. And it's also a price weighted index, not a market cap weighted index. But that's a lot of weighting on UNH, which has been hit pretty hard. Right? I mean, that's a big drop in this stock. I mean, from high to low, we're down 25%. You can see that's why the Dow's been struggling. Most of the Dow struggle has been because of the stock. Now, once the dust kind of settles, I mean, I don't think that healthcare stocks are necessarily going to be doomed because they just make too much money and they're obviously going to pass crap to consumers anyway. But I could see, okay, we've had a pretty ridiculous run for a while. Let's go into this like broadening pattern through COVID. If we have some type of low in here, there's a good spot to be looking to get long. If we are making slightly lower lows here and slightly higher highs here, well, we either get some support at this 200 moving average, or we come back down to slightly lower lows, but I would trade it right back into the midpoint or potentially trading it back up to all-time highs. So, for the Dow recovery, we probably need to see UNH perform a little bit better. Yeah, that trades, it's set up as a credit spread. Okay, so SPY down 1.4, Q's down 2%. Again, led by Mag 7. Let's go to the live heat map. Mag 7's dropping. I don't know if I said this early in the session, but I do look at NVIDIA today as a potential ownership price. I've been trying to kind of chase NVIDIA for a while with credit spreads. They've mostly paid me profit. The ratio spread, I was kind of eager to like, oh good, I'm going to take some assignment here. Didn't happen. It got above my 130 price or my 132. I didn't take any assignment. Now I have a 138 by 137. I think what I'm going to do now is on my NVIDIA trades here. Let me check and see how many accounts have the NVIDIA credit spread. I should have enough cash to take on. It'd be a 137. It'd be like a $13,000 or $14,000 allocation, which I've got the capital for it. Let's see. Let me see. I think I need to look at. Let me look at MO. I might look at close some MO. So my lesser buying power ones, like that one, should be fine. This one here. So MO. Dividends, got some shares. Partially covered at 50. Partially covered there. Could I close the whole thing down? Let's see. So if I close out my shares, let me see. What do I get back for buying power? I don't know. If I need the buying power, I could probably just get rid of my MO. This overall is up like 90 grand. I have a bunch of covered calls. Anyway, I want to talk about NVIDIA for a second. So NVIDIA, I have the 138 by 137, and then I have some ratio spreads lower. So looks like I have 1, 2, 3, 4 accounts that could have some NVIDIA, and those should all be accounts that can handle it. So let me take a look here. Here's a 138 by 137. Let me calculate. NVIDIA is going to be a little bit slippery this morning, but I should at least get $1.05 of value out of this long put. So if I close this down, I'm getting $1. Let's see if I get $1.40 for this. I'm getting more premium than the real value, which is kind of nice. Let me see if I can get $1.40 for this. $1.40. I already have a closing order for NVIDIA. Well, tell me what it is. Okay, so replace this order. There we go. So NVIDIA is potentially dropping a little bit. So right now, I know that I have a 137, so I should get at least $1.20 to $1.30, and it's showing like $1.50. So I get a little bit more premium, which is okay. Let me see if I can get $1.50. $1.50. Filled at $1.50. So now I'm potentially taking the ownership at, as long as we're below 138 today, I'm going to take some ownership on NVIDIA. So this account also, see if I can get $1.55 maybe. So let's replace this one. $1.60. Filled at $1.60. Okay, that's fine. This one here, close. $1.60. Replace. Try to get $1.55. Okay, $1.50. Come on. All right, I'm going to leave it here at $1.50 if I can. I need $1.12, and I'm getting $1.45 maybe. So I'm getting a little premium extra, which is nice for considering it's the day of expiration. It's not too bad. That one's fine. This one, yep, got enough capital there. It's no problem. $1.45. $1.46. Try to sneak in an extra penny. $1.51 fill. Good. Okay, no exposure there. This one has it. $1.45. Okay, I'm just working the long puts that I have on here for a little bit of profit. Come on, NVIDIA. Should fill me at $1.45 here. There we go. Got filled there. No exposure on that one. And no exposure on that one. Okay. So now that I've closed out the puts, if price stays below, and here's what I'm going to set on my chart alarm. Set this, move this to 138 would be above sell put. So no assignment. So what I'm looking at is if price today somehow recovers on NVIDIA today up to 138, then there is zero assignment, which means my 138, I don't take the shares. And on my 137, I closed out for, let's say $1.45. So I still have my 50 cents on the trade. I still have $1.45 in the long puts I just protected. So if I don't get assigned, which price would be greater than 138 today, I'd still walk away with about $1.95 per contract. So it's, again, an income play, but if it's below 138 today, then first thing on Monday, I'm coming in and I'm putting in a collar trade, which means I would be assigned. Here's how I know my break even. I get assigned at 138. I take away my 50 cents. I take away the $1.45. I own shares of NVIDIA at 136.05. If I go out 1 or 2 weeks, I'm essentially going to sell a call. I'm going to buy a put, and they're going to cost me nothing. Okay. And if price goes up, then NVIDIA gets called away for income. So I'd probably look at selling like a 140 call and try to get $3 or $4 of income. And I'd probably end up buying like a 132 or, maybe whatever put that costs about the same. I want to try to take a collar for a net credit. Okay. All that means is I'm going to sell a call, buy a put. Doesn't cost me anything. Hopefully I walk out with a little bit of a credit on that. and I'm protected the downside for the next 2 to 4 weeks, and I'm getting it called away for a profit. It goes to the upside. Now, I still think that the reason I want to have the protection on Nvidia is for this reason. If Nvidia is going to head down to this 200 moving average, I want to lower the cost basis to that moving average. In order to do that, I've got to have a long put. Okay. So a collar trade could help me do that. I could have the covered call just generate income. I could have the long put offer up some protection. And if I could own some net shares down here towards the 115 handle, I'd be a lot happier, giving myself some more upside and then protecting the downside as well, just to be safe in case this gets a little bit nastier, like back down to this low or back to the August low. Maybe this whole story of AI stocks and AI agents and all the spending that's been going on. It's like I still think the AI stuff is going to be an important story moving forward. But consensus-wise, we have to have a pretty good market. Nvidia's been one of the higher valued stocks. I know there's like heated competition now as Tesla's trying to make its own chips and Apple same thing, and they're trying to get away from like this reliance on Nvidia. It's got a head start. I think at some point Nvidia is going to face a lot of heavy competition, but that might be 12 to 24 months away or further. We don't know. The quantum computing stuff, does that affect AI? Does that affect Bitcoin? I don't know. So that's a big question mark that I have moving out into late 2025 or into 2026. The arguments right now, it's like in the next 10 years of innovation, we're going to see more than we've seen in the last 50 to 60 years, which could be true. It's like technology moves at a blistering pace, and our job is just to try to keep up. All right. So does that make sense? So today, watching a video for a closing bell, if we are greater than 138 today, then there's no assignment and I'll keep the income. If we're below 138 today, then Monday I'm putting in protection. Okay. And in fact, I'm actually wondering if I look at a put right now, let me check Nvidia here. How far would I want to go out? If I went out to, let's say, the end of January and I want to buy a put, I could buy the 130 put there for about 485 would be my buy price. And then if I want to sell, so right now my break-even price is around 136.05. If I sell a 140, I can do a collar trade for $1.30 credit, which lowers my cost basis. So 136.05. Nvidia 136.05. If I do a collar trade for $1.35, I might just want to get this trade on. I could also tighten this up a little bit more and just make it like pretty much a free trade. So if I did current price is $1.36, I do a 133 put and a 140 call. I still get 15 cents credit. I'm just protected a little bit more aggressively. If we do end up falling to 130 or 125 or 120, that just becomes more of a real value trade. So I could still do a collar that doesn't cost me anything. Still have some upside symmetry where I would basically get a $4 credit, $4 winner. So if it goes up, okay, it goes up, I get $140 gets called away with a break even of 136. So I'd make $400 on the shares that I own. If it goes down, I'm going to keep the shares and just lower my cost basis by whatever credit I can get out of my put. That makes sense? So if I can close this put and I would track this like, okay, the collar essentially cost me nothing, but I need to close out this credit from a 605. Let's say it goes down to 120. Well, a 133 to 120 is $13. So I paid 605. I closed it out for 13. That can generate an extra $7 of credit. So I can lower my cost basis on the put side too. All right. So let's see what happens today. I don't necessarily have to jump in and have protection right away without having the covered call. I don't want to just throw a call out there because I already have one at 138, or it's a potential assignment at 138. So most likely I'll send in this trade until Monday and then start adding in like, where's my break even? Does that make sense? All right. So if anybody took this trade with me, this was a Pulver alerts at 138 by 137. If anybody's in this trade with me, I am, okay, so I closed for $1.45 credit and potential assignment at 138. So if price is below 138 today, there's that potential assignment, and I'm going to keep the shares. My goal is to work my cost basis down as low as I can, and try to work my cost basis down towards this 200 moving average. This is resistance, resistance, resistance. This is support, support. This is a great spot, in my opinion, to be long. So if I can lower my cost basis into this 110, 115 zone, I could probably give myself $5 to $10 of upside, and I could flip this stock for, 500 to $1,000 of profit. So what would cost me about 14K in capital, could I flip it for $1,000 profit? Yeah, that's decent. Just under 10%, right? That's a pretty good flip for maybe holding this thing for 2 to 4 weeks. Okay. And if I do that on, 6 or 7 accounts, that's a pretty good chunk of profit. Why is everybody getting this trade alert? Hang on a second. Back. Sell, buy. Yeah, what the hell? All right. Anyway, any questions on NVIDIA? Okay. So I will update that in the Pulver Alert section for the A1 Trading Discord. I also need to add in my trades that I took yesterday, which includes the income trades. It was essentially ratio spreads. I did a ratio spread on PGR. I did a ratio spread on Tesla, and I did a ratio spread on Microsoft. I also did a income play on MicroStrategy. That might burn me today. 332. My break even is 312.15. It's not that bad. I guess I'm okay. I need price to stay above 320 by one. Okay, so by next Friday, that's not bad. Yeah, this is okay. If MicroStrategy is above 320 by next week, I'm walking away with $785. So MSTR, MSFT, Tesla, PGR, all fresh trades from yesterday. We did those live in session, and those are going to be added into the alerts. So it gives me some stuff to watch through the holidays. MicroStrategy, for above 320, I did a deep in the money covered call on the shares that I bought, trying to turn it into a little income. NVIDIA, I'm kind of hoping we stay above the 130 or below the 138 level so I can keep the assignment. I want the shares. I accept the challenge of give me the shares, let me lower my cost basis, let me generate some income. And early in the year, give me, $500 an account, so give me 11 accounts at $500 to $1,000 profit. That's a nice little chunk to kick things off. Price hasn't gone anywhere. Price actually went down and I still make money. Same thing here on MicroStrategy. If it stays above 320, that's fine. So let me set a chart alarm, at 320. And this is below the sell call level. And my break even is 312.15. So I still have some room to lower the cost aggressively on MicroStrategy. But if we just stay where we are, then we're going to be fine. Okay. All right. Let me do some top down. Let's get some currencies. I've done a lot of talking and not a lot of chart showing, but I've got some trades obviously to take care of. And looking at my positions here for today's expirations. Okay. There's the NVIDIA stuff that I just take care of. SPY. I have a, what is this guy? That must be an income trade. Fudge, it's going to be a small, shucks. That's going to be a small loser on my SPY. What is that guy? Did I take this trade wrong today? December 27th. How long has this trade been open? Fudge. Let me see here. Trade price. Days open. Okay. So I've had this trade open for a while. 38 days has been open, and it's not above my strike. Fudge. All right, that's going to be a small loss. The other ones are out further. So that expiration's okay. All right. What else for 0DT? NVIDIA expiration today. Baidu have some shares. That one's going to be expiring today. Okay, no big deal. AT&T. I have some covered calls that are getting called away, so I've got about $5,500 of profit coming on AT&T today. Getting it called away around $22. Let me see if I can do a quick roll on this. Let's go purple account. So can I do a roll today? Is it worth it? So if I roll it out a week, I get 4 cents credit. No thanks. If I roll it out a month, I get 28 cents credit. On 200 shares, is it worth a roll for 50 bucks? No, let me just take the shares. I'll take the $2,000 and move on. All right, I'm gonna let AT&T get called away today for profit. What else? Pfizer. I'm gonna add in another sell call for next week. Generating some nice profit on those sell calls, trying to lower my cost basis. NIO, I'm gonna take a small loss on that today. No big deal. What else? VFC needed above 20. I'm going to take profit on this one here. This should be close to 80 cents. I'm just going to take this profit. Close. Let me see if I can get 85 cents maybe. I get lucky. Closing order. Let me go 85 cents. Not taking it. 84. I just want to get rid of some of these expirations for today. Just give me one less thing to manage. All right, I can at least get 80 cents for it, which is still about a, let me see what I actually traded it for. So the trade price is 50 cents. I'm walking away with 30 cents out of 50, max profit. Let's go close here for, come on, man, give me 80 cents, would you? We're trading at 21.90. This thing should be worth 90 cents. All right, got filled to 80 cents. All right, small winner there on VFC. What else? GLD, SLV, those are 4-day expirations. Okay, so this is the window that I need to keep an eye on for today. So SPY, let's change the color. SPY to NIO. Right, so SPY, I only have one 0-day, and that's going to be a small loss. And then NVIDIA, potential assignment. So this is going to be a small loss. And then NVIDIA, I'm looking at assignment. So I'll put A for assignment. And then Baidu is going to be income. So I for income on a covered call. AT&T is going to be profit. I'll put P for profit. Pfizer is going to be income and lower my cost basis. NIO is going to be a loss. So I'm taking 2 small losses on SPY and NIO. Pfizer is income, and I'm going to add some more to lower my cost basis. AT&T is a full profit on the stock getting called away with a break even at 19, getting called away at 22. Lower the cost basis down into like the $17 area, so it's a nice little win. Baidu just getting a covered call, just lowering the cost basis, getting some income there. NVIDIA, if I take on assignment, this one should be, hopefully a income trade. A for assignment, I for income, because eventually I'll flip that thing for, $5 to $10, hopefully minimum. All right, and then the rest for my expirations, these are out a little bit further, and I can tend to those next week. All righty. Any questions for me today? Let's go to some currencies. I'm not done. Let me. You want to go another like 5-10 minutes with me? I don't know if we have another guest on after me. If not, I'll keep rocking and rolling here. But let's find out. So top down, in the red for everything. SPY's down, Qs are down, Dow's down, Russell is down. VIX is up around 19% today. Dollar index, chop suey here. Oil, chop suey. Gold, I still think gold's coming down to 2,500 or 2,450, which I'm happy to scoop up some more. I'm just going to wait for that level. Silver, hanging out there right around $29, $29.50. I like that level. I'd love to see this. No, Sharon, I'm not. I'd like to see silver, if we can stabilize in here. I'd like to see silver get back up here and offer us a bullish pattern. Sharon, if you want to find me, this is a good place to find me. Also, I'm with Prosperity Pub, and you can get into my Discord or Telegram. I'll share that if A1 Trading doesn't mind. I mean, I'm in the A1 Trading for Pulver alerts, running a full service the way that I just, It's kind of whatever I like to trade, I can trade. I've got a lot of creative freedom here with my Pulver alerts to trade what I like. It's a variety of strategies from, you know, buying shares where I want, you know, dollar cost averaging where I want, trading the levels that I like, trading a bunch of option trades, putting in futures trading, hedging my portfolio, trading currency pairs as well. So it's a full spectrum of different trades with the Pulver alerts. I run particular services with Prosperity Pub that are, you know, either income generators, daily income generators, portfolio plays, things like that. So anyway, if you want to subscribe, there's my YouTube channel. I share my Discord and my Telegram and stuff like that when I'm live. So anyway, there's ways to find me. All right, silver. I'd like to see if silver can stabilize in here, make its way back up into, let's say, $32. And if that's a bit of a bullish play, I still like the measure move getting up to 36. Now, silver could also underperform and come back down to 26, but that to me is a big spot to be looking to add more exposure. I'd still like to be long on silver. 26 if we get there. If not, I'm looking for this to be an add-on position to get back to 35 and change. At $36 is a great profit one, and then my other measure moves all the way up here to 48. So I'm still going to maintain a pretty bullish outlook on silver. Let's say medium term. Okay. Bitcoin 94. And I had said here that, you know, we hit symmetry. It was a pretty good measure move right there. High, low, lower, high, lower, low, pulls back into, like, let's say 90 to 80. I'm looking for more exposure in here. And, you know, it may not be like this instant V bottom on Bitcoin because, look, Bitcoin is going to matter with risk appetite. If we see equities markets heading lower, I'm sorry, Bitcoin, you're going to go down with them. You know, there's a direct correlation with money supply and risk appetite and the direction of our stock markets with Bitcoin. There is no way that you can say that Bitcoin is going to move in its own pace and it's going to be separate from equities and separate from currencies. Like, Bitcoin is now officially tied to risk appetite. Okay, so if you have risk off, you're probably going to see some risk off trading. In fact, just over the last couple of weeks, when we saw this, right, the FOMC scare that we saw on Wednesday, the 18th, there was a pretty noticeable outflow coming into most of these Bitcoin ETFs. So is it, you know, profit being taken? Possibly that. Is it a reallocation of the portfolio to remove some of the, you know, if somebody put 1% of their portfolio here and all of a sudden it's up 1.5 to 2%, well, they go back to that 1% allocation. That's forced profit taking. You know, so anyway, I see this symmetry level offering a bit of a correction. I like adding some Bitcoin into here. But I don't know. I mean, it's still going to be risk capital to me. It's still going to be credit spreads on some of these trades now that we can trade options. But I'm watching to see how it plays out. And also with a little income trade that I took on MicroStrategy, can MicroStrategy stay above 320 by next Friday? Maybe it does. Ethereum, can it stay above $60 by the 17th of January? Maybe it does. I hope it does. Okay, copper. Here's Japanese yen. Okay, the Japanese yen has gotten weaker. The question is are we going to start to see that the Bank of Japan hand is going to be tugged a little bit, and they've got to do something like they did back here with some intervention, with some bit more of a hawkish rhetoric hitting the markets? I don't know, but dollar yen's probably a good proxy. If we hit those highs at 160 to 161 again, okay, highs up here at 161 to 162. We had previous highs at 160, which is kind of that like magical number where it's like intervention. Okay, then we went higher than that, ran those stops, swept those highs, intervention. So I don't know what's going to happen here, but I don't think anybody would be surprised to see this stay positive carry trade until it's not. You know, and this might be another quick run at those highs. It's a tricky situation, but I would be looking to get long the Japanese yen, not by trading currencies. Okay, I'm sorry. You're not going to convince me to trade the Forex market on the Japanese yen. It's going to be too tricky. In my opinion, it's going to be too slippery. When the market moves, usually it's, you know, midnight my time or 1 a.m. my time. I'm not interested in waking up to trade that crap, you know? And I don't want to dollar cost average in and say like, well, just put a stop loss really wide. No, it's the dumbest currency pair to me. So what I'm going to do instead is trade 6J, which is Japanese yen futures, put in defined risk trades. And if this is going to be a rejection, then I can trade the bottom on 6J and be long the Japanese yen. And so if I lose, I can lose. And this thing could go, look, the Japanese yen could literally go bankrupt and I would still lose the exact same risk that I take on this trade. But if this is an area to start getting long, then I'd like to get long with defined risk. And so to show you that right now, and again, I'm just curious, I'm probably not taking any trades right now, but here's what I'm looking for. Okay, what's my contract look like? I can go out into all sorts of parts of 2025. Now, there's also this weird seasonality with the Japanese yen. Sometimes we see like an aggressive pricing like end of the year. Well, that's now. The Japanese yen hasn't gotten stronger end of the year. Okay. They didn't really do anything disruptive like post-Fed, right? The Fed was very disruptive on the 18th. The BOJ didn't do anything the next day. It was just more of the same. So Japanese yen still remains weak. Now, going into next year, I'd almost like to see I don't know. I have to go like longer term, in my opinion. So would I be comfortable taking a trade out to September of 2025? Probably not. I'd probably want to see like a November, December, January of 2026. Either let's say December, okay, December of 25, or let's say January of 26. I'd want to see those option expirations offered before I start placing a trade. And on top of that, I want to see the price is moving into this kind of at the point where it started to reverse. And if it comes in that same area, then I'll start looking for defined risk on Japanese yen futures. Okay, Nikkei starting to go higher. Oh, what's up, Nikkei? Of course, the EWJ that I bought is heading a little bit up, but it doesn't look the same as just trading the Nikkei. But this will be interesting. Okay, so is the Nikkei going to go higher here? Are we going to test the all-time high again? Let's find out. That could be exciting. I do have a little position here on EWJ. This is an ETF that gets rid of the bottom 15% of the Nikkei 225. I bought $1,500 right there. It's down about $3. Argentina, I'd like to see another flush lower if possible. I don't know if you've been following the story, but this is one of the most impressive inflation stories that I think we've ever seen. I'd have to find the chart of it. I know I have a screenshot of it somewhere on my phone, but basically they are down to like 2.4% inflation from what was as high as like 40%. I don't think I'm exaggerating. I know it was at least 20. It was in the 20s, but it's come from like 20, 30, 40% inflation down to less than the US. And this happened within the last couple of years. So it's a remarkable turnaround story. And you can see that, what is representing the stock market. This is a, MSCI instrument representing Argentina. It's been a heck of a run, so I think this is a pretty solid play for, defined risk. I don't know. I'd be happy to throw in like $1,000 on Argentina or more. I mean, I'm probably just going to trade some options on it, but I want to see if it will pull back to a reality first, like something like that. Find some better dynamic support, and then look for nice opportunity to buy, do the same type of thing, right? Something like that would be great. If I miss it, I miss it. But if it comes back to an attractive level, I'm going to scoop it up. Mag 7, like I said, today's sell-off is led by Mag 7. Apple is down. Amazon is down. Google is down. Meta is down. Microsoft is down. All these things are down. I'm happy with that. I want them to come down. I want to get some more attractive prices. Give it to me. NVIDIA, fine. Need to stay below 138. I'll flip that for some profit. Nick, you still in that 420 covered call? Did you move that around a little bit? Think that expired today, right? So you getting it called away? That's cool if you do. I know you're up a ton. I've got some dollar cost average levels in, and then I also put a ratio spread in here. That's out to February 280 by 275. I'm willing to own the stock, but I'm willing to own the stock way cheaper. So I'm just playing the income game right now. And then if I get any assignment, it's going to be at prices that I'm willing to set, smaller dollar cost average amounts into. And then I'll trade, the options at a much, much more attractive price. Berkshire Hathaway, another ratio spread here, willing to own this. It's kind of like it's like a SPY derivative, in my opinion. It's a little bit less volatile. And then we have our bonds versus yields. Okay, 10-year yield right now is still clinging to green on the day. It's indecisive. My concern is that the 10-year yield continues to be the story that's making the Fed look like idiots. 10-year yield rises. Fed rate cuts already been down, 100 basis points. So we're sitting at like 4.25%, 4.5% right now. And the 10-year yield is literally off the lows, the exact opposite of what the Fed's been cutting. Fed cut 100 basis points. This is up 100 basis points. Well, that's just the Fed bluff being called. That makes me nervous. And I don't know if this is, I don't trade this like, oh, it's just like a currency pair. It's just like liquidity sleep. It's not a thing. It's really not a thing. Like, I don't know what this is going to do. But the scariest thing about this is if it goes higher, expect we're on borrowed time if that's the case. Like, this broke the market back in 2021, 2022. If we somehow get the 10-year yield up even higher, I don't know how we don't have like a pretty deep, nasty pullback / recession, because it's going to freeze the consumer. And 70% of our GDP is consumerism. And if people aren't buying, then we're fucking slowing down. We're freaking slowing down. Fracking. We're slowing down. But that's the big chart. That's one big thing to watch for 2025. All right. Mortgages, they're higher. Happy Christmas, everybody. You want to buy a house? Well, now it's 80 basis points higher than what it was back in August, September. Cool. Other stocks, Costco, give me a pullback. Thank you. I want to see deeper pullbacks in Costco, 144 to 200 moving averages. I'm happy to dollar cost average in. These are all stocks that I would like to have in the portfolio, maybe with the exception of, I don't know, we'll find out. Visa dropping a little bit. That's good. MasterCard dropping a little bit. That's good. Let me see what those are up right now. I took some trades on all of those. Visa, MasterCard. Let me change the symbols here. I'll go into some currencies. I got a few more minutes. Visa, MasterCard. So Visa right now is up 135 bucks. I got some time. I need price to get back below 315. MasterCard is right here. MasterCard's up 300 bucks. Need price to stay below 530. So I did a monthly expiration on this one. If we get a decent push well below the sell put level, then I'll probably take some partial profit. For example, let me just go into one account here. So Visa, MasterCard. So a 535 by 530 bear put spread, and I paid $1.95, and I'm up to $2.30 credit. So I'm up 45 cents on the trade, which right now is not exciting, but 45 out of $1.95, I'm up 23% return on capital. I'm going to try to go for more. But if we have a little bit of a sell-off, coming into the end of the year or early January, I'm totally good with that. We'll see. If the market pits, I don't know, maybe I should just take partial profit and not try to call this freaking top. That wouldn't be too bad. I can sit on this for the weekend. I'll get a little bit more time in here, see what Monday offers. Okay, so we'll see. All right, what else? Johnson & Johnson, Progressive, CB. I did this. This is a ratio spread on Progressive. Or did I do a ratio spread on, I think I did PGR. Yeah, see, because the option situation on CB was pretty crappy, so I did PGR instead. Palantir, I didn't find a one that I liked. Carvana, it's pulling back. I'm not going to touch the stock. Redfin, I'm just interested in some of these, like, used cars, and Carvana's been like just I mean, I'll just say $20, like $20 to $200, let alone nearly $300 is just insane. Redfin, we probably need to see a better looking housing market. And I would imagine that for a stock like this, that just is kind of like a Zillow, does it come back down to levels that are, also noticing that, okay, rates are coming down. This might be a decent play. If we stay suppressed on Redfin, I would look for maybe like an end of 2025 trade. I think this is going to have a lot to do with if mortgages come down, then this stock looks a little bit better. Same thing on something like RKT. Okay, Big Mike, I appreciate that comment, man. That's a great comment, and it's true. I mean, yeah, if you want to follow some turds out there that'll have no money in a couple years, just let a bear market happen, and then watch all your Lambo, diamond hand, fart coin traders, like, let them all disappear. It's fine. I've been doing this for almost 25 years, so I've seen a lot of traders come and go, but that's not why I'm here. I'm here so we can, let's be here for another 10 years. Let's be here for another 20 years. Okay. All right. Let's talk currencies. DXY, I'm still not fighting the dollar. Let's go through the basket. Dollar CAD, I'm still long. Still looking good to hit my profit target towards 44.80. I mean, I'd like to take this all the way to 46. I'm just not trying to be greedy. I've got 7 positions in and heading up to my profit target. Dollar Swiss, I'm also still long. I'm adding some buy stops up here. I did that yesterday. So I added in a market order, buy stop, trying to get to 9,200. That's my profit target. That's going to be about 27 positions for profit. So I've been building this thing for a while, and that's a really nice profit target. So I'll take it. So I'll watch those two. That's dollar strength. As far as other currencies go, Aussie CAD, I'm still going to wait on. Aussie Swiss and Swiss in general, I'm still waiting on positive swap. I'm willing to dollar cost average in lower on Aussie Swiss, CAD Swiss, New Zealand Swiss. Euro Swiss is still looking pretty good right now. I'm looking for Euro Swiss to stay bullish. In fact, let me do this. On my TastyFX account, I got a bunch of trades in. I'm going to start stacking some orders in here. So let's go like 95, 95, 50, 96. I'm going to stack some orders in here and put this in for the Pulver alerts. I'm going to go probably like 95, 95, 50, 96, 96, 50, stack in some orders, revisit these lows again if possible. This might be something that builds like this, like maybe it's choppy, right? Maybe it's choppy and then it's a falling wedge. And then when it breaks out, it starts to move and it moves quickly all the way back to that high. So that's what I'm watching for. And I want to have some orders ready to go. So these are profitable. If I can build lower, then these will be profitable and I'll stack in some more positions on Euro Swiss. But I do like this trade all the way back up into this inefficiency zone as well as a sweep of this high at 99. I think parity is a great spot to get back to as well. Okay, pound Swiss. Still hanging on this one, trying to get back to, I'm trying to get back to 119, 119.50. That's a long-term target, but I'm still profitable on all my add-ins here if I get to like 1700. New Zealand Swiss, same thing on Aussie Swiss. I'd be willing to add in at the flash crash low from August. And then stack my way back up, try to get into, I'd say this would be a good profit target here and a run to this high. So profit 1, profit 2, if we come back to the same low. All right. So there's plenty of opportunity, running into the way that I trade Forex, which is slow, methodical, strategic, build small, and eventually take like big fat profits. It's not the sexiest way to trade. Traders that want leverage and they want their, I only want to risk 20 pips today. Well, you're not my trader. I'm a trader that uses Forex to trade big areas, build positions up to the size that I want, draw down risk to me as percent in dollars, and then I usually double, triple that. So if I'm risking, let's say $1,000 in drawdown, I generally can turn that into $1,500 or $2,000 plus in profit. And so I do a lot of that on these higher time frames. So I'm really picky about what I trade. I don't like to just throw trades in because I just follow one currency pair pretty closely. No, it's not my style. So look, my evolution of Forex trading was 1 minute chart day trader to literally swing trading, position trading like I do now. And I'm way more successful that way. I don't have to have, day-to-day grinds. It's not like getting stopped out and hunted all the time. It's like I just trade really small. When I find a trade that I like, I throw a bunch of positions at it. I'll throw, my dollar Swiss trade probably has 25, 27 positions. If I get stacked into those buy stops, I'll have nearly 30 orders running on that thing, but they're all getting paid. It's 30 profitable positions. They've, managed small drawdowns, but they also are confirming that price is going my way, and then ends up hitting my profit target. That's a fun way to trade. It takes time, takes patience, but those profit chunks are way, way, way worth it. Okay. All right, good stuff. Other currency pairs, that's about it. Watch the dollar basket. Be careful on the Japanese yen. I'm still staying in with the rank for some positive swap, and I'll watch my levels closely. Stock market wise, we're still down. Going into the end of the week, that's a bit of a sad. I'd say the momentum is certainly waned. We're back below the the Santa rally, so we're officially in red territory now. Doesn't mean that we can't do something better, but it means that from this close yesterday to wherever we are today, this is going to be seen as an island gap. Okay. This will be seen as an island gap. Now, the bears may grab some control if they push lower. The bulls may grab some control if they push higher and fill the gap. So we have the FOMC low, the PCE news low. The bears can take a run at that. The bulls can take a run at getting back to all-time highs. We're sitting right in the middle, right? So from this high to this low, price is going to be sitting here in an island all by itself for the next week. Next week, we've got 2 days before New Year's. We have disrupted trading from the brokers. We're going to have like another 1 p.m. close on a Tuesday, no trading on Wednesday. Then Thursday, Friday, what's the market going to do? I don't know. Historically, Santa rally's been a positive thing. On average, 1.3%, but right now it's actually down. Okay. So this market is going to have to pick itself up in a pretty big way on Monday, Tuesday in order to get back into positive territory. So let's see what happens. But look, it's the year is almost done, right? Coming into a clean slate. Whatever happened in 2024, good, bad, accept it. Learn from it. Make it better. I want to make 2025, again, best year yet. 2024 has been one of my better years. As far as risk-adjusted returns, probably one of my best years. I even through that August dip, I was only down like 7%, and I'm pushing close to 40% gains for the year. That's pretty good. That's pretty good. So I'm happy with that. I've got happy clients. I think that, it's like, and again, I know I paid for protection. I know I lost on a bunch of hedges, but they paid when they had to. They paid in April. They paid in August. So far, it's like I still have hedges on the Qs. If the Qs drop to 510, I'm getting a $23 hedge that I paid $6 for. So there's still some potential like hedge profits that help me offset, and then I'll see what the rest of it looks like. So, all right, I'll let you go for today. Happy Friday. Have a great weekend, and we'll be back and grind this out again on Monday. All right. Sorry for mowing swear. All right. Thanks, everybody. See you soon. Bye.